Take two. Go.
Okay, we're gonna pick up where we left off, and I think Marty, you're gonna give an overview. There was an outstanding question.
That's right. That's right. We were talking about that non-GAAP policy about the accrual, and actually during the break we were speaking a little bit. It's as I was mentioning, it's fairly common. The state of New York actually does the same thing, and to put it into context, a lot of government enterprises operate on a bit more of a cash basis, thinking about cash to a budgetary basis. And so for financial reporting, external financial reporting under GAAP, you then layer on these accruals. And so therefore, it's maybe a little bit of a different kind of mindset, if you will, when you compare it to your traditional commercial enterprise. Suffice it to say, it's a fairly common policy, and the alternative, as I was mentioning, you could come up with some sort of estimate, but at the end of the day, for practical purposes, it is just easier to kind of have a time at which you decide to cut off, and as a result, there's usually some fairly inconsequential activity that comes through that's unrecorded. I don't know if that kind of clears up where we were with that. But if there's no further questions, I'll kind of continue along with the presentation. So if we go to page 4, the next slide, please. And as we make our way there, what we'll see is, there we go, is the picture of the overall client service team. We won't go into too many details here. This is a similar slide that we shared at the outset of the audit months ago, but it's a nice little reminder of the number of folks that are involved in the audit. But I also included it so that we could do a little double click on some of the other parties that participate in the audit. In particular, on the right-hand side, you'll see, as I mentioned, Ariel from Team Avalora. That's our MWBE participating firm, one of the two. And so the next slide is a little bit of a highlight of the MWBE participation. I know that there were some questions during our last meeting, and so we thought that this would be a nice way to kind of close the loop and summarize the level of participation, the nature of that participation. As I said, there's two firms that participated in this year's audit, Team Avalora and Long Island Financial Management Services. Again, the participation level is approximately 30% of the overall audit effort, and is not only a requirement, but as a firm, this is something that KPMG for many years has embraced in terms of advancing the opportunities for smaller minority owned firms to access organizations like DASNY that they might not otherwise have the ability to serve. And so it's a fantastic program that is pushed and promoted by the state and DASNY, and that we certainly embrace. Ariel, I don't know if you want to speak briefly to some of the areas that you participated in the audit.
Sure.
Thank you.
Thanks, Marty. Hi, everyone. I'm very glad to be here today to join this audit committee meeting. I'm the subcontractor working with Team Avalora, and just a little bit background of our firm. We are the MWB firm, a CPA licensed firm. We have been working with KPMG for the past 10 years, primarily supporting the state and local government audit in both financial audit and the single audit as well. We integrated into the engagement team by having a KPMG assigned laptop. We are also trained to utilize the KPMG audit tool, as well as following the KPMG guidelines. We also have direct communications with the KPMG professionals at all levels, including the seniors, the managers, and the partners. We also have direct communication with the client as well through emails, through status call, or even on-site in person. We participate in both the planning stage and as well as the execution stage of the audit. And also just to mention, we also follow the GAS CP requirement and the independence requirement just to ensure we are compliant with all applicable standards. So with that, I think I covered a little bit of our role and the engagement team. I'll hand it back to Marty.
Thank you, Ariel. And Ariel hit a couple of really key points. So it's not only the individuals that are participating in the audit, but also obviously the firm. So independence, making sure that each year we go through a due diligence process to make sure that there aren't any issues from the firm or individual on the engagement perspective, from an independence, certainly from an ethics and compliance perspective, CPE requirements, things of that nature, making sure that in all respects, they're effectively operating at the same level as KPMG as it relates to our requirements to serve as the auditors of DASNY. So we'll obviously continue to have Ariel and her team work with us and look forward to having them participate as we wrap up the rest of our work. And so moving along, a couple of slides ahead, we have a chart that summarizes our required communications. We have a number of slides that go into a few of these topics a bit deeper. So as you kind of see a number of check marks, the areas where you don't see check marks, where there's kind of a dash, that's indicating that there's either no matters to report or no instances of non-compliance or issues, things of that nature. So that's a good thing. But this kind of helps keep us honest, this chart, that we're making sure that we're communicating all the required communications, all the required things as a byproduct of our audit. If we move forward one slide, I think there's one last item to touch upon in sort of this catch-all is the sort of the final line here, the involvement of the internal audit department of DASNY. So in addition to the participation of Ariel's firm and the MWPE firms, we also have a significant level of involvement from the internal audit department, of DASNY. And again, same idea. We need to make sure that there's obviously the level of independence and the appropriate level of supervision by us as a firm with the folks that participate with us. And again, a critical feature of our audit, going through a number of different areas that we listed here, both on the income statement and balance sheet side of the house, a number of our significant areas. So another important aspect of the audit and leveraging the resources that have a depth of knowledge in the organization to help us perform our procedures. Moving along, in the report, there's a slide that touches upon the auditor's report. We'll move beyond that in the remaining deliverables. We've already touched on that. There's a slide on page 10 that brings us through some of the communications as it relates to those non-GAAP policy, the specific non-GAAP policy. I will say this is probably the important public service announcement. The footnotes and the financial statements are consistent with GAAP otherwise in all material respects. They're consistent with what we see used by similar governmental enterprises. And so when you think about the industry and you think about GAAP, the financial statements are exactly what we would expect to see. There were no significant new accounting pronouncements that required adoption this year. There were a few that were adopted because now incorporated into the policies. And one that was noted in the footnotes, GASB 101 regarding compensated absences. And so there is a footnote highlighting that. The effect of adopting that was fairly inconsequential to the financial statements as a whole. But there was a nice disclosure that was added, nevertheless, to acknowledge the adoption of that standard in the financial statement. So just pointing that out. Otherwise, if you were to look at the financials, they're fairly consistent year in and year out. So with that, I'll hand it over to Ryan just to touch upon a few other slides before we wrap up.
Thanks, Marty. As Marty kind of touched on, I'll kind of hit these slides a little bit high level because there haven't been a lot of material changes in the significant accounting policies and practices. So just to note on this first slide that the significant accounting policies by DASNY are prescribed in Note 2 of the basic financial statements, and they are prepared in conformity with U.S. GAAP. And through our review, there were no significant transactions recorded that lacked authoritative guidance or consensus. Moving to the next tab. We have this slide in all of our audit committee presentations for every client, just kind of the note on the presumed risk of management override, just given their proximity with the financial statements and their ability to override controls. And just to the right there, you'll see some of the our additional procedures that we kind of perform just to kind of combat that a little bit. So we examine journal entries, we evaluate them for completeness. We review all the accounting estimates, which I'll talk about on the next two slides in a minute. And then we incorporate elements of unpredictability. So that kind of relates to some of the way we sample things. So there's not always, there's always that element in there that kind of helps prevent that presumed risk of management override. And then we always have kind of our professional skepticism going through as we're evaluating audit evidence as well. So second tab, again, I'll kind of hit this high level for our OPEB liability. We engage our firm actuaries, so we kind of have an independent evaluation of the key assumptions and factors that go into the liability. And we note there that there were no indicators of unusual or inappropriate management bias. And overall, we concluded that it is in accordance with GASB 75. And similarly, on this next slide here for the fair value investments, we also develop an independent expectation of the pricing of all the fair value securities. And again, here, no indicators of unusual inappropriate management bias during our review. And our conclusion was that the amounts recorded are in accordance with GASB 72. Moving on to the next slide. This is just a note here on the one of the significant disclosures, conduit debt. Just kind of a note here of what we do to kind of get comfort over this balance, since it's a little bit larger, that we send out independent third-party confirmations through our sampling technique. And then we vouch those responses to each individual conduit debt amount that we've selected. And again, here we note that there was no matters identified. It was all in accordance. One quick slide here before I pass it back to Marty. So we perform limited procedures over the management discussion analysis, as well as required supplementary information. And for both of those, for limited procedures, there was no material inconsistencies and nothing to note from that standpoint.
Perfect. Thank you, Ryan. And so as we close to wrapping up here, there's a slide that says required inquiries. I like to kind of refer to this as a memory jogger. If there were ever any concerns with respect to, as Ryan alluded to, management override, misappropriation of assets or inappropriate, financial reporting sort of behavior, if you will. We're accessible as the auditors, and certainly we would encourage folks to bring that to our attention. You can either go through management if you're on the committee, or obviously work directly with us. We connect with Joan in connection with these meetings, and so the door is always open as it relates to that. As Ryan alluded to, we were not made aware of anything that gave us pause or concern or was somehow suspicious or unusual in connection with the audit procedures that we performed. So we include this in all of our presentations with you because it's important to make sure that we touch upon that as a reminder. And then in our appendix, we do have a slide as it relates to independence. As we sit here today and throughout the entirety of our relationship and through the date of the issuance of these reports, we are independent and will remain independent. And any other services that we provide, there's some tax preparation. Obviously, the actual production of the financial statements themselves are a non-audit service that are all permissible, that we all screen to ensure that there aren't any, independence concerns. So nothing to report from that perspective. We take that very seriously, and even alluding to it when we were referring to the MWBE participation and certainly with the participation in internal audit. And then that kind of is wrapped up all in this final slide. For the materials that were sent out in advance, you can click on these. These are a series of reports that we put out to touch upon our audit quality, a number of the different quality control features that we have as a firm. We are heavily regulated ourselves, and so we put this out there for folks to have a better understanding as to where we stand from a compliance perspective. And so this is here for more for your general information purposes. So with that, that concludes what we are intending to cover. I don't know if there's any questions from the committee or from folks on the management side. We'd be happy to field those.
Audit members, committee members, do you have any questions?
No questions by me.
Marty, these slides are available.
Al, I know that KPMG is required to, in effect, certify its independence, and I think that's terrific. The MWBE firm, in this case, the WBE firm, are there steps taken to ensure that they certified their independence? And if so, to whom?
They certify their independence to us. We effectively take, this is probably not the right terminology, but ownership of the relationship. So it's on us to ensure that they are independent. And so that's where that due diligence process that goes in, not only at the front end when we're contracting, but also throughout the engagement, through today, and then obviously beyond the issuance of the report, there's check-ins beyond that. So, but it is through us that certification, so to speak, exists.
Thank you.
Any other questions? Okay. So Kim, we're going to talk about.
Yep, I'll go through just some brief highlights of the financial results. Turning back to the financial statements included in your audit committee tab, I'll review some of the significant items that are included in this year's financial statements and provide you highlights of DASNY's financial results for the year. Beginning with the executive summary on pages 6 and 7, highlights for our lines of business include a strong year for our debt issuance activities, issuing approximately $10 billion in debt, comprised of $5 billion on behalf of state institutions and another $5 billion in conduit debt borrowings. On the construction management side, we continue to work on a number of projects, including the new academic building on the FIT campus, the Mohawk Residence Hall at SUNY New Paltz, the Western New York Psych Center, the New York State Life Sciences Lab, and the Mid-Hudson Forensic Replacement Hospital. Additionally, we awarded a $55 million design build contract for construction on a new 300-bed residence hall for SUNY Binghamton. From an accounting perspective, I think as previously noted by KPMG, we adopted GASB Statement 101, compensated absences. This updates the recognition and measurement guidance for compensated absences and requires that we recognize a liability for leave that has not been used and leave that has been used but not yet paid in cash or settled through non-cash means. A liability is recognized for leave that has not been used if the leave is attributable to services already rendered. It accumulates and is more likely than not to be used for time off or otherwise paid in cash. As a result of adopting this pronouncement, DASNY restated its beginning that position by a reduction of $10.8 million as of April 1st, 2024. We also adopted GASB 100, accounting changes and error corrections, which enhances accounting and financial reporting requirements to provide more understandable, reliable, consistent, and comparable information. There was no impact on the financial statements as the effect of the new rule related solely to additional disclosures. Lastly, we adopted GASB 102, certain risk disclosures, whose objective is to provide users with essential information about risks related to a government's vulnerabilities due to certain concentrations or constraints. The pronouncement requires us to assess whether a concentration or constraint makes the primary reporting unit vulnerable to the risk of a substantial impact on whether an event or events have occurred, have begun to occur, or more likely than not to occur within 12 months of issuance of the financial statements. There was no impact on the financial statements as a result of implementing GASB 102. Quickly turning to our financial results, overall, the financial statements reflect an increase in our net financial position of $137 million, the majority of which is activity in our restricted funds. DASNY's operations showed a surplus of $2.7 million, which reflects a surplus of $1.2 million on the public side and a $1.5 million surplus on the private institution side, primarily due to a $900,000 surplus for financing and bond administration, and a credit or reduced allocation of OPEB expense due to amortization of prior improvements in the discount rates. In terms of debt issuances, as discussed on pages 9 and 10, we issued approximately $5 billion in debt on behalf of state institutions. Almost all, or 97%, came from new money and refundings. In terms of distributions, and as shown in the charts, nearly 2/3 of issuances, or 61%, was on behalf of New York State agencies. On pages 12 to 14, you'll see we had $3.5 billion in bond retirements for the year. Approximately 56% came from defeasances and early redemptions, and 34% from bonds that were refunded by new DASNY bonds. The majority of defeasances and early redemptions were a result of prepayments provided by the state at the end of 2024. Moving to pages 14 through 16, we ended the year with $60 billion in outstanding bonds, an increase of $4.3 billion from 2024. The split between state institution and conduit debt bonds remained relatively stable at 60% and 40% respectively. In terms of our construction management line of businesses, on page 17 through 19, our total construction and loan disbursements increased approximately $309 million in 2025. Certified disbursements saw an increase of $166 million, primarily in the SUNY program, offset by a decrease in New York State agencies. DASNY managed project disbursements saw an increase of $143 million, primarily related to New York State agencies. Turning to page 21, DASNY's statement of net position increased $137 million as in 2025 compared to 2024 as restated, primarily due to an increase in restricted net position related to state prepayments. Increases of approximately $5 billion in assets and liabilities were largely driven by the net increase in bonds outstanding, the related loans receivables, and cash equivalents. Net investment in capital assets decreased $1 million, primarily due to depreciation of capital assets and amortization of right-to-use lease assets and subscription IT assets. On page 22, you can see total investment balance of $8.8 billion reflects an increase of approximately $3.1 billion, primarily due to prepayment of debt service obligations by the state and new money bond issuance activity, net of disbursements for construction projects and grant programs. Additionally, money market funds saw a $2 billion decrease from the prior year, largely due to the investment of monies held for the prepayment of debt service by the state. DASNY's total investment portfolio has increased to approximately $9.6 billion. Also included within your materials, we have the supplementary information that was provided with the financials. Those include schedules that break out our financial statements by program type and DASNY's operations, DASNY's budget and actual expenses for its operations, and a schedule of outstanding bonds and notes. We are required to submit the auditor's report and basic financial statements to the Office of the State Comptroller by June 30th. During today's board meeting, there will be a resolution for the board to approve the adoption of the basic financial statements as of and for the year ended March 31st. Before I conclude, I just want to take a quick moment to thank the people that are responsible for the receipt of the current results. In addition to the tight audit deadline, staff have also been working on the replacement of our financial management system. Now that the audit is coming to a close, they will be resuming efforts to get into the user acceptance testing phase of that implementation. But once again, I continue to rely heavily on their experience, knowledge, and dedication of the finance team to maintain our books and records accurately, to provide necessary support to the auditors, and to ensure that we continue to receive unmodified opinions and ensure our financial statements are filed with the state in a timely manner. In particular, I want to thank Diane Topple, who's here with us today. She's Assistant Director of the Accounting Unit, who along with her team oversees the entire audit process, coordinating the various parties to ensure we stay on target. Throughout the audit, in addition to her team, Diane had the support of Steve Winters-Bona, who's the Assistant Director of the Debt Team, Stanley Reed, Director of Treasury Management Services, Jeff Arnold, Director of Budget and Operations, Kelly Ray, Assistant Director of Accounts Payable, Tanette Tomlin, Senior Financial Analyst in the Debt Team, and many others on the respective teams. Without their dedication and oversight, again, we would not have these audit results today. I also like to thank Chia Wu, who's in our internal audit team, who supports KPMG during the audit process. And then lastly, I would like to thank KPMG and their team that supports us running a smooth audit each year. I appreciate their continued professionalism in conducting the audit and their partnership with, I believe, Team Avaloria and Long Island Financial Management as well. Unless there are any questions, that concludes my remarks on the financial statements.
Tim, it's Al Carney. No questions. Just wanted to get in the record that you've done a terrific job of taking this organization to yet another unmodified opinion. Thank you for all your work and the work of your team.
Thank you. Thank you.
You jumped the gun. I was going to say the same thing, Al.
I'm sorry, Joe. I'll take it back.
This is a huge effort, and Kim really deserves recognition too, because as the leader of this whole organization, she has pulled together incredible staff and worked diligently with KPMG. We love having KPMG. You guys do a great job, but I think kudos to Kim as well. Thank you.
Thank you.
Does anyone else have questions on the particulars of the audit? If not, I'd like to turn it back to Kim so she can tell us next.
Next, I'm just going to give a brief overview of the annual investment report,
Excuse me.
which is also required to be filed with the Office of the State Comptroller. This report includes our investment policy and guidelines and summaries of investment income earned and fees paid for the year. A copy of DASNY's financial statements will also be filed with the report. There were no changes to our guidelines during the year. Investment income totaled $377.1 million for the year, $17.4 million of which was earned from construction funds, with the remaining balance of $359.7 million from all other funds. An additional $77.8 million was earned on investment of conduit debt-related bond and note issue proceeds, along with the reinvestment of existing funds related to conduit debt, which is not reported in the basic financial statements. During 2025, DASNY paid approximately $1.1 million for trustee and custodial services. Unless there are any questions, that concludes my report on the investment report.
Are there any questions?
None here.
I'm fine.
Kim said I can move to a resolution now. I'd like to recommend to the board the approval of the dormitory basic financial statements as of and for the year ended March 31st, 2025. Could I have a motion, please?
Second.
Second, Al, all in favor?
Aye.
Great. Thank you so much. KPMG, thank you. Staff, thank you so much.
And then a motion for the annual investment report.
And I would like to make a motion that we move to the annual investment report. And Kim?
No, I already went through it.
Excuse me, I mean, yeah.
Recommendation.
We need recommendation for approval of the annual investment report as well for the period ending March 31st, 2025. Could I have a motion, please?
Second.
Second. Al, second. All in favor?
Aye.
Thank you. Okay. Now I'm going to turn over to Robert. And Robert, you're going to go through the Public Authorities Accountability Act annual report, please.
I will, Madam Chair. Thank you. As part of our annual filings, in your materials, you'll see our ABO accomplishments and annual report, which really summarizes many of the activities of our various business lines, including public finance, construction services, and grants administration. And what you'll see is really the backbone of what becomes our 2025 annual report, which we'll be working on this summer. But included in this, I'd like to highlight a number of our key accomplishments. DASNY completed 17 bond financings last year, valued at approximately $9.6 billion. We also delivered approximately $6.4 billion in bonds for our public clients to fund a variety of programs, including our school districts, our Board of Cooperative Education Services, also known as BOCES, our sales tax, and our personal income tax programs. We delivered approximately $3.2 billion in bonds for our independent private sector clients. So DASNY completed 3 lease transactions under its tax-exempt leasing program, better known as TELP, valued at approximately $51.1 million. Our current outstanding bond portfolio totals approximately $16.1 billion. And DASNY's total construction portfolio included 916 projects valued at more than $13.5 billion. DASNY completed 65 construction projects valued at $351.1 million, and we completed 13 summer projects valued at $106.7 million. We also initiated 94 new full-service construction projects valued at over $1 million, and those totaled approximately $465 million. DASNY has had awarded original procurements valued at approximately $1.36 billion. We also administered more than 25 different capital grant programs on behalf of New York State, through which we executed 1,144 grant disbursement agreements with local governments, not-for-profit organizations, and other eligible entities valued at approximately $456.3 million. DASNY's projected cumulative MWBE expenditures were approximately $200 million, which represents approximately 34.56%. And the breakdown on that is 20.53% for MBEs and 14.03% for WBEs of our total contract expenditures. And on March 7th of 2025, the governor signed an amendment to our Medical Care Facilities Finance Agency Act, increasing our authority to issue certain bonds and notes by $1.8 billion on behalf of eligible hospital and nursing home projects. There's much more detail in your materials, but I think that provides a robust overview of what we were able to accomplish in the past year. Thank you, Madam Chair.
Thank you, Robert. Certainly it was a busy year. We wonder what you did in your spare time. Could I have a motion to recommend to the board approval of the Public Authorities Accountability Act annual report? No one has questions?
So moved.
Second?
Second.
Thank you. All in favor?
Aye.
Great. Thank you very much. At this point, may I have a motion to go into executive session to discuss the financial history of a particular corporation and matters leading to the appointment, employment, promotion, demotion, discipline, suspension, dismissal, or removal of a particular person or corporation?
So moved.
Second.
You all in favor?
Aye.
Okay. Right, so we ask KPMG